being in control of your own life and your own finances, people who want that, and then this is very, very attractive. I mean, where there is a difficulty is how to marry the concept of national sovereignty, given the way we've been managing our economies, how you marry national sovereignty with this, and that's a much more difficult, taxing and troubling question. Now, of course, one of the answers is we live in a global economy anyway, and there's still a huge amount government can do in terms of law, regulation, trade deals, and all the rest of it. But one of the keys for government has been effectively to control the levers, over your own financial system, and this is going to make that much more difficult. And I think that's why this is a revolution. That's why government's so scared of it. That's why central banks are so scared of it. But as I go back to my original point.
Hello and welcome to This Week in Review with Nigel Farage. Nigel, usually we look at the story of the week, why it matters to you, why it's important, and what's behind that story. But this week, I wanted to do something different. I want to look at the story that is not in the news. And that's the story of Bitcoin, which is why we've invited Sam Volkering on. Sam, I'm sorry to put you on the spot here because you've just come back from paternity leave, but can you update us on Bitcoin over the last few months?
Yeah, right. Well, where to start? Should we start with El Salvador accepting it as legal tender, putting it on par with the United States dollar? We could talk about the UK putting restrictions on Binance markets for regulated activity in the UK. The EU coming out saying they want to pull it into their anti-money laundering and counter-terrorism regulations, so they're going to ban anonymous wallets. I mean, where do you start with when it comes to Bitcoin? Ultimately, most people come back to something like price. The value of it in fiat currency has fallen significantly from its highs earlier this year, about 50%. And yet, then yesterday, Jack Dorsey, founder and CEO of Twitter and Square, was on a conference call with Elon Musk and Cathie Wood from ARK Investments, talking about Bitcoin and the future of Bitcoin and how they're integrating it into their respective organizations. I mean, everything, put it this way, Nick, the development of this space and the expansion of Bitcoin and the wider crypto universe is accelerating at a speed that I've never seen in over a decade. Most people get caught up in the mainstream media negativity. They want to latch on to things about the energy inefficiency of Bitcoin, or they want to talk about the EU or the FCA with their issues with Binance. But the reality is that is just smokescreen. That is just a facade that the media use to get clicks and views on their channels. The reality is that the forward momentum of this space is happening at such speed, and Bitcoin being a central part of that, that for me, there is only one direction this is all heading, and that is forwards and upwards.
Nigel, usually when Bitcoin halves in price, the media jump on the bandwagon and start lambasting it, saying it's at the end of the bubble and the whole thing's gone bust. But this time I've noticed that hasn't happened. There hasn't been the same sort of criticism as the Bitcoin price has corrected. Why do you think that is?
You're absolutely right, because the last time we saw a major dip, and we talk Bitcoin, but there's more than Bitcoin out there. There's Ethereum and many other cryptocurrencies. And I know Sam thinks there are others than Bitcoin that are actually rather well set up and structured. They all caught a cold, didn't they? Because the last time it had a big dip, they all said the end is nigh. It's all over. It was all a bubble. It was like the tulips. It was, and what you saw on the way back up, interestingly, were long-term institutional investors getting involved, a much broader acceptance, of crypto as a means of exchange, and a lot more credibility. And I think the point that Sam makes, which is quite vital for this conversation. I mean, look, if you're a short-term punter, then go long or short of Bitcoin for the next 3 weeks. I haven't got a clue. Spin a coin. I mean, you might as well just put on a horse at Newmarket this afternoon. But if we're thinking in longer term, there is no doubt there is a broader acceptance and credibility for these cryptocurrencies, a much wider usage, they're becoming a pretty respectable mainstream investment and means of exchange. And so there's no doubt that's happened on a big scale. So I think that for the press, once again, to say it's all over, they've made their mistake once, they're not going to make it again. So they'd rather just say nothing. And actually, if you scan the financial pages, the commentary on the falling price, it's not even on the front page generally. So there isn't much noise around that. Now, look, I mean, I am a subscriber to much of what Sam talks about, and we did talk to this audience last December. We had a long conversation last December, and I recommended Sam's book. I mean, the one big danger to all of this is massive scale government intervention. That is the one big danger, and I think we've all got to be realistic about that. But we also have to say that for government in the West effectively to regulate this, that actually means the internet would no longer be free. And the implications of that, given how we now live our lives in the 21st century, are even bigger than the whole argument about crypto and where it's going. And so I was in America, as you know, for a couple of months earlier this year, and I met a lot of very, very big players, very, very big players. And, even those that felt that the Fed just would not put up with this ultimately, it couldn't quite answer that question. Well, how do you take away internet freedom? So I think the balance of probabilities is that governments will not be able to ban it. They may make it more difficult. They may, anonymity of wallets. I mean, these are areas where I think we will see regulation. And I'd be interested to get Sam's view on this. But I kind of, although I tend more towards laissez-faire than state socialism, I do actually think that a degree of regulation in markets can make them better and safer. So we might actually find that some of the measures being put in place actually do make sense. So for me, the balance of probabilities is that in terms of where we go over the next year, 2 years, 5 years, I still think there's a much greater risk of inflation, perhaps even stagflation going on within our economies, an increasing loss of confidence in the way that governments and central banks have managed the crisis, and frankly just lied to us all the way through about what they're doing. And if we do start to see inflation eating in to people's savings in the way we did back in the 70s and even actually through into the early 80s, that's when I think the retail sector will go for cryptocurrency, and possibly in a very big way. So it's a long answer to your question, but basically, I still think these are sound long-term investments.
Sam, I'm sure you agree with most of that. Is there any part that you disagree with?
No, not really. I mean, the people talk about this space being unregulated, and it's unregulated from a legacy traditional financial standpoint. The FCA or the SEC or ASIC, whatever your regulatory body is in your jurisdiction, they don't have regulatory controls over this stuff. But that's not to say that the crypto economy and the wider crypto ecosystem itself isn't regulated. It's self-regulated. And so you find a lot of exchanges they've already anticipated all this coming from, these regulatory bodies. So they've, most of them do still now already require, your name and your address. And they do steps towards verification to ensure that you're not going to participate in money laundering or terrorism financing, because they are still striving to be legitimate businesses. People, I think, still have this weird misconception that cryptocurrency use is like the Silk Road was back in 2011, when it was just for drugs and guns and illegal and illicit substances and things like that. So we've moved on from that conversation so dramatically that it's not. I mean, people still bring up this, Bitcoin's only used for terrorism financing and money laundering. It's just such a crock of BS that it just displays a fundamental lack of understanding about the wider ecosystem and the development going on. I referenced it when we kicked this off about El Salvador looking to accept, well, not looking to, they put into law that Bitcoin is a legal tender. That puts it on par with the US dollar. I mean, that's a legitimization of Bitcoin as money, which many of us have already known for a long time anyway. Now, obviously, you know, El Salvador, I'm sure, have got their own political problems and whatever. That's not the point. The point is that while countries like China are going to kick out all their mining operations, they want to ban it, they want to stop it. And I can see why they want to do that, because they want the Chinese, you know, central bank digital currency, the E1 or whatever they've called it. They want that to be their command and control measure for their population. They want to be able to surveil and to track everything and everyone within their country. So they're going to do these things. The US is going to follow suit. They're going to introduce a central bank digital currency. Again, the primary purpose of it is to eliminate the black economy and to command and control where money goes and how it's used. Utter monetary surveillance. That's my take on it. And I believe that, you know, that's the reason they're doing it. But then you've got countries, as I say, in South America, you'll find there'll be countries in Africa and parts of Asia that see this as an opportunity to break the shackles of financial control from major Western economies like the United States and the United Kingdom and the European Union. And so you'll have this kind of, you know, state competition around money and what is or what isn't accepted as money. And a lot of these places are experiencing inflation, double-digit inflation already. And so they're looking to use something like Bitcoin as a way to stem that broken system that they are just inevitably latched to. And so I think that we're seeing states, we're seeing governments look at this from different perspectives. Some are looking at it as a threat to their power base. Some are seeing it as an economic opportunity to lift the living standards of their population. And that's going to play out over a number of years as to how that plays. But for other people, you know, it's empowerment. You know, ultimately, when we're talking about why this is happening and the explosion of it and where it's going, we're talking about a power struggle between legacy financial institutions and systems and new, decentralized, quite libertarian viewed financial system, which crypto and Bitcoin is. And that power struggle is not going to go away. There will be issues with it. There will be successes. There will be failures. But ultimately, I believe we are looking at a complete change of how we look at money, how we transact and interact with each other, because money is just a network, really. And it's going to empower a lot more people and give people a lot more access long-term to financial prosperity.
Nigel, are you seeing the same parallels that I am with the Brexit struggle and the pound versus joining the euro and the ERM? All of that is very similar with the sovereignty argument, the idea that you should govern yourself or your own country. Bitcoin and the other cryptocurrencies are the same sort of idea, but on an individual sovereignty level.
Yes. I mean, of course, you know, being in control of your own life and your own finances, people who want that, and you know, then this is very, very attractive. I mean, where there is a difficulty is how to marry the concept of national sovereignty, given the way we've been managing our economies, how you marry national sovereignty with this, and that's a much more difficult, taxing and troubling question. Now, of course, one of the answers is we live in a global economy anyway, and there's still a huge amount government can do in terms of law, regulation, trade deals, and all the rest of it. But you know, one of the keys for government has been effectively to control the levers, you know, over your own financial system, and this is going to make that much more difficult. And I think, you know, that's why this is a revolution. That's why government's so scared of it. That's why central banks are so scared of it. But as I go back to my original point, the only way they can really kill it is to become like communist China or North Korea and take control of the internet, and that actually is something electorally that the population won't put up with. Whatever the reluctance of government, it's very difficult to see how they can stop this.
Nick, I just wanted to add, I think the other thing is as well, we do talk a lot about government and government intervention and how they view this. All of this so far to this point has been driven by people, by individuals, and now we're starting to, it's a reverse in how things usually happen, you know, from the government down. Is this has come from individuals, literally from one person or entity through to many, and now it's spreading into corporations and bigger organizations and you know, the upper echelons of the wealth scale. And then finally the government's the last part of this to switch on and start to figure it out. So I think that's a significant point about it all as well, is that power shift, there's people are already seizing that control and power by using these technologies, these financial networks and technologies to grow wealth, to exist outside of the legacy system. And now we're just starting to see this transition phase as to how corporations can use it. And we're seeing a growing number of them adding something like Bitcoin to their balance sheets. And then we're going to start to see governments. And soon enough, I believe, well, obviously El Salvador is the prime example, but we'll see more nation states start to add Bitcoin or other cryptocurrencies as part of their treasury and economic management as well. So they're late to the party, and everyone else has still got an opportunity to, I think, get on board this train.
But Sam, it's all too risky for investors. They shouldn't be allowed to buy Bitcoin, should they?
Yeah, so I sent you a great article about when Apple listed in 1980, December 12, 1980. Apple listed its stock at $22 a share, and it was trading at about 90 times earnings. There's this great article from the Wall Street Journal at that very date where the Boston regulators in Massachusetts said that it was too risky for individual investors to invest in Apple. And so they banned it. They actually banned individual investors from investing in Apple on the day of its public listing. The firm boot of authoritarian control has existed in the legacy financial system for decades. This isn't anything new. We haven't really had the tools to break free of that. And they're trying to do that again. Crypto's too risky. You're going to lose all your money. I think it was the governor of the Bank of England said that you should expect to lose all your money in crypto. And it's like, okay, if you're converting the prices of all these things into fiat money, yeah, there's volatility and there's risk when it's converted to fiat currency. But ultimately, if you exist and step outside of that legacy system, they can't stop you from using and transacting with cryptocurrencies. This is a significant. I hate to use the term because it's such a stupid term, but it's a paradigm shift in how we use money and how we transact and interact with each other. It's a peer-to-peer network. It's not a me to the bank, to the government, to the bank, to another intermediary, to a middleman, to somebody else. This is me to you, you to me, and we can create commerce and we can create value in order to do that. So, yeah, the risk argument is there. If all you're concerned about is short-term, trading in and out of fiat money, but fiat money is the one that's devaluing at a rapid rate here through inflation. It's only going to get worse. So people use the term, I don't know if we can swear on here, so I'm not going to swear, but they use the term S-coin when they talk about a lot of different crypto. Well, the real S-coin in this situation is fiat money. And in my view, it's the cryptocurrencies that are going to have the longer-term value here.
For the readers and listeners and viewers who think that they should be allowed to judge for themselves whether Bitcoin is too risky or not, Sam, you've got a briefing out about where the Bitcoin price is headed next, and importantly, why. Why don't you give us, without giving too much away, the general idea in that briefing?
Yeah, look, ultimately, we can't avoid the fact that we still talk about Bitcoin in fiat money prices, like pounds and like dollars and yen and whatever. So ultimately, there is a wealth story here. My view is that long term we won't convert back to that currency at all. But nonetheless, people still want to know what's the value of Bitcoin going to be longer term. And there are a number of triggers and catalysts, I think, that are on the horizon. Some that are happening this year. There's no guarantee that it's going to happen this year, but I'm pretty confident that there will be a decision this year. And we've heard some of the bigger Bitcoin funds and organizations talk about how they're going to achieve this and their specific targets to achieve this. But it's about opening up and unlocking that door of Bitcoin and other cryptocurrencies to major financial institutions to make it easier for them to get involved, to cut through the red tape, the bureaucracy, and start to utilize and leverage Bitcoin in a way that bolsters their financial position and protects them as well for all these reasons we're talking about inflation, about government control, all these sorts of issues that we now face as a society. Corporations also face that too. And a lot of them don't want to be under that authoritarian boot of the government and central bank control. And so they're looking to cryptocurrencies to achieve that. And there are a number of catalysts this year, some really big ones that I think are going to really shake that up and open that door for a lot of these big legacy players.
If you'd like to watch Sam's briefing, there will be a link below this video or popping up below my face, depending on where you're watching the video. And you can access that briefing there and find out where Sam thinks the Bitcoin price is headed. Let's give the last word to Nigel Farage, though. Nigel, it seems to me that the pingdemic has made people realize just how little they should trust the combination of government and technology. And I wonder whether that's going to be a driver for the Bitcoin price, because I think it will make people realize that the alternative of government-run money and government-run apps and government-run technology is a really bad idea.
Well, how many billions did the Blair government squander on a new NHS computer system? And the list goes on and on and on. And now we have the pandemic with this mad app that can ping you through a 3-foot wall. Yeah, government, innovation, technology. The communists have been trying it. The Marxists have been trying it for over 100 years. And it always ends in complete and utter failure. And it is the profit motive and the free market that actually finds the right solution. So, I mean, frankly, the idea that the Bank of England is going to introduce some form of cryptocurrency, I mean, just, don't make me laugh. So, this may present short-term investment risks. It does. It may give long-term investment risks, but everything gives investment risks. You have to take a view. That's the point of it. And to the kind of people that subscribe to us, we never tell them, put the house on this stock or on this cryptocurrency. We're always saying to people, be sensible in terms of the percentage that you allocate to anything. I would have thought, if you agree with the overall thesis, Nick, that we are putting out there, that devaluation of currency, that inflation, it's happening already, then you should, I think, have a small percent, maybe a small modest percentage, but you should be in this game somewhere.
But don't do so without checking the risks first, which are, of course, also in Sam's presentation. Thanks very much for joining us.